All right, so for our final video of Chapter 7, we got to go through the information that is not in the book. Well, it might be in the book, but it's not in Chapter 7, that's for sure. So for AGI deductions, these are above the line, and you can see they're listed on Schedule 1. And we're definitely going to go through some of these. We can't possibly go through all of them. So we're going to highlight the majors, but there are many, many more that appear on the second half of Schedule 1, and we're not really going to talk about these, although they've appeared in various places. Non-taxable amount of the value of Olympic and Paralympic medals. That's under prizes and awards. But most of these other things are pretty obscure code sections, so I'm not going to really spend any time on those. All right, let's spend some time on the educator expenses. This is a fairly small, basically giveaway to teachers in the K through 12 system. So normally, unreimbursed employee business expenses are non-deductible, but in this case, they are deductible for K through 12 teachers of up to $300 in 2022 of class supplies that they purchase out of pocket. Of course, if they're reimbursed, then the school pays for those and the school would take the deduction, but schools aren't taxable. If they're married filing joint, then both can get $300, but they must both be teachers. So it's not as if they're married filing joint and one's a teacher and one is an accountant, only the teacher gets the $300. You don't get to boost it up to $600 because it's married filing joint. Qualified expenses for the educational expense deduction, professional development courses related to curriculum, book supplies and equipment that you buy for the classroom, and in 2020, it included PPE. An ordinary expense is one that is common and accepted in your educational field. A necessary expense is one that is helpful and appropriate for your profession as an educator. And the expense did not have to be required to be considered necessary. So Gail and Ben, married filing joint. Gail's a school teacher, Ben's an architect. Gail spends $300 on teaching supplies. Whoops. Better fix this slide, and then we'll come right back to it. All right, I like these numbers better. Gail and Ben, married filing joint. Gail's a school teacher, Ben's an architect. Gail spends $350 on teaching supplies. The educator expense is going to be limited to $300. That's Gail can take up to $300, but Ben gets $0 because he's not a K through 12 teacher. If they're married filing joint and both are school teachers, let's assume Gail spends $350 and Ben spends $150. Well, the total deduction is going to be limited to $450 because Gail can take $300 and Ben can take $150. So it's not like Gail can shift her $50 over to Ben. Now, instead, Ben probably should have spent $200 and Gail should have spent $300. And then they would have been able to take everything that they spent. All right, let's keep rolling. Certain business expenses. 3 types of employee business expenses are eligible for deduction. And these are, again, specific carve-outs. So fairly rare, but they're for performing artists, reservists, and fee-basis government officials. And they all have a different set of rules that permit a deduction. So let's start with performing artists. They must have worked for more than one employer during the year and received no less than $200 from each. So that means they had to have at least been paid $200 from each of those employers. Their expenses must exceed 10% of their income. So well-to-do performing artists are unlikely to exceed that level of expense. And then the one that really crushes you is AGI is not more than $16,000 before deducting expenses. So wow, thanks for giving a performing artist who makes less than $16,000 a year the opportunity to deduct some of their employment expenses. Yeah, it should be called the starving artist deduction. There is no doubt. So reservists. So these are reservists for the U.S. Armed Forces. If they travel more than 100 miles from home in connection with reservist activities, they may deduct travel expenses limited to the federal per diem amount. And we'll talk about those per diem amounts when we get to travel and transportation. But fee-basis government officials, these are individuals that have a government job, but they are paid by the collected fees not salary or wages. So, for example, some justice of the peace or building inspectors are paid this way. They can deduct their unreimbursed employee business expenses. All right, so the next area is called the health savings account, or HSA. So HSAs are a lockbox account. We've talked about lockboxes in this class. So they're a lockbox for health-related expenses. Contributions to an HSA are deductible up to a certain limit, and distributions out are not taxed as long as they're used to cover medical expenses. HSA is only available to taxpayers with high deductible health plans. The minimum deductibles, 1,400 single, 2,800 family, those are adjusted each year for inflation, so they're higher in 2023. Contribution limit, the deductible contribution limit is $3,600 or $7,200 if it's a family plan. And contributions made by an employer can also be excluded. And this is typically done through some sort of cafeteria plan. The next area is moving expenses. This used to be a much broader deduction. It's now quite narrow. It's suspended for all but members of the U.S. Armed Forces. If they're on active duty, the move is ordered under a permanent change in station. They can deduct their moving expenses. This also means that reimbursements by your employer are taxable. So it was fairly common. It remains fairly common, actually, for when executives get moved around. They can often get a moving reimbursement. They get their expenses paid for. Those are now taxable. Previously, there was a 3-part test to determine if moving expenses were deductible. I only bring it up because this provision is slated to expire at the end of 25. So previously, 3-part test: must change job sites, involve move in which distance from old house to new job is at least 50 miles more than old house to old job. And I used to have a nice graphic where I would show that, but given that it's really expired right now, it doesn't matter. I'm just letting you know in case it comes back. Must be at the new job for at least 39 weeks or 78 weeks if self-employed. So 1/2 of self-employment taxes is a For AGI deduction. We'll get complete coverage of that later on. But basically, self-employed individuals pay FICA taxes just like everyone else. Self-employed retirement contributions are deductible, right? So a qualified retirement plan is another lockbox. Contributions by the employer are excluded from gross income and also deducted by the employee. Income earned while in the lockbox is deferred, and then distributions are taxable unless you have basis in them, which would mean they were post-tax contributions. So there's a number of different self-employed retirement retirement plan options. Typically, that's where the work is, and we'll cover those later on. Oh, I do mention some of them now, however. SEP plan, simple plan, individual 401k, or the KEO. These are all qualified retirement plans that are for the self-employed. The different plans, not PANs, have different limitations and requirements, but all include the following types of restrictions. You can't favor highly compensated. The accounts need to be held by a fiduciary. They can't be commingled with the business funds. Early withdrawals are penalized, and there must be vesting requirements of contributions. So another For AGI is the individual retirement account deduction. IRAs, or individual retirement accounts, are another form of lockbox. So these were designed for employees that lack access to a qualified retirement plan, or maybe are just low income. And so employer contributions just fall well short of what would be adequate for them to save for their own retirement. So again, lockbox for those people, more later, but contributions generally deductible, but they can also be non-deductible if you structure them that way. The income that is earned is deferred, and distributions are taxable unless you have basis, which would require non-deductible contributions. We'll cover the requirements and limits later. Another For AGI deduction is when you withdraw a piece of savings from the bank and they charge you a penalty. So this is common with certificates of deposit, CDs. If you break your CD early, there's often a penalty that you will have to pay. That is a For AGI deduction. So Gloria purchased 2-year CD from a bank. She turns out she needs access to that money in 9 months and breaks the CD. She gets charged a fee that is a deductible as a For AGI deduction. Alimony is a For AGI deduction. We covered that earlier in chapters, I believe, 3 and 4. No, sorry, 4 and 5. And then the last one is a student loan interest deduction. So you can deduct the interest that you pay on student loans. It's limited to $2,500 of interest per year. Phases out for AGI above $70,000 or $140,000 if married filing jointly. So Jay single, he pays student loan interest of $4,000 in 2022. His AGI before the student loan interest deduction is $80,000. So how much can Jay deduct? Well, 80 minus 70, which is the beginning of the threshold, is $10,000. So he's $10,000 in excess of the threshold. 10,000 divided by the phase-out range is 2/3. So he's only eligible for 166.67. Sorry, that's the phase-out amount because that's the amount he's above. So he's only eligible for 833.33. My bad. So that's the amount he'll deduct. And that brings us to the end of Chapter 7. Thanks for watching.